So now we're going to create the income statement and the cash flow statement. And notice this picture, the balance sheet is something that is a statement of what's happening at a point in time. So we've got a year zero balance sheet where we had a bunch of zeros on it. We had a year one balance sheet that we just computed. And in between those, what links the year zero balance sheet and the year one balance sheet is the income statement and the statement of cash flows. And we're going to see how those links are made in the next couple of minutes. So here's our spreadsheet again. So we got our ending balance at the bottom, and we want to form an income statement. Where would we look for the income statement? That's right. So income is going to be part of changes in retained earnings. So our income statement are going to be all the changes in retained earnings except for the dividend, because again, dividends are not part of income or expense. So remember, we had some rent expense, we had some revenue, we had that cost of goods sold, we had the wage expense. So the way an income statement would look using this information is we got revenue on the top, then cost of goods sold goes below that, and gross margin, which is just a term that means revenue minus cost of goods sold. And then we have our operating expenses, which are rent and wage expense, and then subtracting those off of gross margin gives us our net income, which is $3,000 for the first year. Now the third statement we're going to look at here is the cash flow statement, also known as SCF, the statement in cash flows. And what the cash flow statement tells us is that we started with a certain amount of cash, we finished with a certain amount of cash, and the cash flow statement will tell us how that cash changed, and it's going to group it into three different types of cash. And we're going to discuss these in more detail in a later class, but the three types are operating, investing, and financing cash flows. So where do we see our cash flow statement in this spreadsheet? So again, we see cash. We started with zero in cash. We ended up with $31,000 in cash. So that's right, our cash flow statement are going to be all those changes in cash that took place during the year. And just as a reminder, remember there was a stock issuance, we had some prepaid rent, we had some revenue, we had some wages, we had some deferred revenue, and we had a dividend. So this is not important to know right now, but we start with cash as zero. We've got $8 of cash flows from operations, which is the cash we collected from our customers, the rent we paid, and the wages we paid. We didn't have any cash from investment. Cash from investment would be like if we bought a building or something like that. We'll cover cash from investment later. And then we had quite a bit of cash from financing. Remember, we raised money in our IPO, so to speak. We raised $24,000. And at the end of the period, we paid our dividend.